put Instagram on as well.
Great.
Hmm. Okay. All right, it is live on Instagram too. Okay, hi everyone. If you're joining us for the first time, welcome to this live session where we talk about everything real estate and more. So today we have with us Chris Pedersen. Chris is a lender, a mortgage lender, and he's been doing this for 18 years. Chris is an exceptional lender that has worked with mostly, and he's got a lot of recommendation from new, or should I say, first time home buyers. He's married, happily married, with two twin boys and a beautiful princess. So I'm gonna let Prince take the floor because we don't have a lot of time. Please go ahead and share if you're here and you know anyone that would need this, would appreciate that. So Chris, the floor is yours. I don't want to take much time. Go ahead, please.
Building wealth with real estate, some of the ins and
Oh,
outs
hold
that
on,
first
Chris.
home. Yeah.
Um,
Everything good?
Everything good. I'm double checking. Okay.
Gotta love live, right?
Yeah. Double checking. We're good now. Okay. All right. Go ahead,
Okay,
Chris.
great. Well, yes. So thanks for having me on to visit with you and your audience. Just a little bit about building wealth with real estate and going over a couple of the ins and outs of what our current market, entails, along with, some things that, first-time home buyers might benefit from knowing. Like you mentioned, I've been doing mortgages 18 years. I love what I do. I've been fortunate enough to help, well over 1,000 families in my career make homeownership a dream come true. So, if anyone on this call or on this audience has questions, my contact information is on this page. You're welcome to email me or text me directly, or, if there's a chat box somewhere here, you guys are welcome to put in questions in that chat box and I can address that for you guys. But so I will jump right on in if you'd like, or do you want to start with some questions, Timmy? What would you like to do?
No, I'll let you do your thing and then we'll
Okay,
deal with the questions and more.
great. Well, great. Well, so one of the things I like to do, I mean, we're in this North Texas market is where we're at. Timmy and I are both in the same market. I live in Frisco, I work in Dallas. And so a little bit about what's going on in our market, instead of just kind of the national picture. So here locally in our market, what we are seeing right now is still, a little bit of low inventory and, demand that is increasing, slowly, but increasing. Just to kind of give you a picture of this, these are the statistics from Netris, the North Texas real estate system, as current as February of this year. Okay. So year over year, new listings are actually up from 2023 to 2024, which is great. Okay. Up by 37%, but pending sales are down by
Hmm.
5.2%. So that speaks a little bit to that inventory and demand. Days on market, as you can also see, started increasing a lot last year, where, last year is at about 59 days on market. We're currently at 61. And so you'll see a big difference there. And then our median sales price, you actually will see has increased a little bit as well, from February of 2023. And a couple other kind of, other statistics I like to talk about. Affordability index is actually down, which has a lot to do with increasing prices and rates. And inventory of homes are up 21%. And the months of supply right now are actually at about 3.2 months of supply. In a really healthy real estate market, ideally you want to see that months of supply right around 6 months. So
Hmm.
we're still significantly lower of that inventory that you really want to be at. But just to cover a little bit about what's happening in our current market, but that's why you are seeing, because the inventory has increased a little bit, demand hasn't increased that much to catch up with it right now, it does make it a great opportunity for new homeowners to jump in and, get into the market now in order to, lock in decent home prices and, get out of the rent race.
Mm-hmm.
Current interest rates, hey, the elephant in the room, guys. Obviously, we know interest rates are not super low like they were a few years back. Okay. But, to kind of show you the trends here is you'll see, back in November of 2023, late October is when we hit kind of a peak of where rates went. We were above 8% at that point. Okay. So we have gained some ground on rates since then. Currently, we're right around 7 or a little bit under 7% as far as interest rates go right now, as far as the average rates. Now, of course, while we're talking about rates, everyone's rates a little bit different and they change daily like gas prices. So it's most important to, get a, estimate for yourself to see what you qualify for. But if you're estimating payments or interest rates right now, you would be safe to bet, somewhere in the high sixes as more than likely, or really low sevens as a rate. Okay. Now, forecast for the year for rates, based off of, Fed, comments, everything else that's gone out here recently. Let's see. So everyone can see the presentation, right? I'm
Yeah,
assuming.
that's right. Yeah.
So, these are the projections based off of Fannie Mae, the Mortgage Bankers Association, and Wells Fargo. And as you can see on these estimates here, the one that's kind of got it the most like on point right now is really Wells Fargo. Because if you take a look at the Q1, which we just ended here in 2024, it was showing Wells Fargo was saying rates would be right in the high sixes, low sevens. And so the Mortgage Bankers Association and Wells Fargo are right there on the spot with that Q1 figure. Okay. Now, if we get into Q2, we're looking at, maybe getting down closer to the 6.5, which is, we're kind of on our way there, but not there yet. And then, by the end of 2024, we're anticipating rates to really be in the low sixes. So, what that tells me here is, guys, if you're waiting for some drastic rate drop, it's not likely going to happen anytime soon. Now, we will see, possibly as inflation gets better, job numbers get worse, things like that. Later this summer, we're anticipating seeing some maybe Fed rate cuts, which will help improve rates. But, people who may project or think that, rates are going to drop back into the threes or fours, sometime soon, unfortunately, they're a little misinformed as far as that goes. So rates will improve this year, maybe not significantly, but, get us back to the point where in the low sixes, which is, by the way, I mean, being in this industry for 18 years, I mean, anything in the low sixes is a great average rate for historically where we're at. Even within the last 2 decades, that's a really great average rate. So that would be a great spot for us to get. So with talking about rates, the other thing I wanted to address is, everyone's like, hey, well, should I wait to buy, or, what should I do? Is now a good time to buy with where rates are? Okay. Well, the reality is, and my favorite quote about real estate is, you never wait to buy real estate. You buy real estate and you wait. Okay. That is my favorite quote. And this is why. Okay. So let's give you an example of, buying now and then refinancing in a 2-year window. Okay. Is, let's just say your buy now price is 675 on a home, and you do have the funds to put down 20%, which you don't have to, by the way. You can put much less than that down if you have it available. But let's just say you do. So that you're spending 135,000 down. You'll pay about $7,000 in prepaid expenses and about $9,000 in closing costs. So total, investment of $151,000 to buy your house now with 20% down. Okay, you finance 540,000. Let's just say at a high rate right now, 7.5%, which would make your monthly payment 5,301. Okay, on this $675,000 house. Now let's look at this. This is the big thing about home ownership that a lot of people don't understand. Is that home is currently worth $675,000. Average appreciation in the North Texas area is really about 8% over the history of time in homes. But let's go conservative and just say that that stays at 5% for the next few years. So in 2 years, then you appreciate almost $70,000 in value. Okay, so now in 2 years, that home that you bought for 675 is now worth $744,000. Okay, now you refinance in 2 years and you get that rate down in the low sixes at 6.25. Okay, you pay $5,000 for your refinance, and so your new loan amount is $539,590. Your $5,300 payment that you did have is now $4,847. And as far as equity, you've got your $135,000 that you put down. You've paid down principal of $5,400, and your appreciation, the $69,000 figure right here. So now you have equity of $209,000 after 2 years, okay, in that home. Now let's say you waited and you didn't buy 2 years ago and you waited. So now you're paying this price, this estimated value, $744,000 for the same house, and you finance 80% of that. So you're financing 595. You get that 6.25 rate that you waited 2 years for. And now your payment's 5191. So, I bought my house 2 years ago. I'm just using this example, and I'm paying 4,800 and you're paying 5191, okay, for the same house. Now, as far as equity, you put down your 20%, so you've got $148,000 equity, but your 148,000 is 60,760,000 less than my $209,000. So waiting 2 years cost you $60,000 for waiting 2 years to get a slightly lower rate. So that's a prime example of why you should buy now and not wait to buy, for when rates do eventually go down a little bit. Okay. Any questions on that out there, Timmy, that I'm seeing?
Yeah, so from me, we have other people here that are from other states like Tennessee. Would you say the cost of waiting scenario can be applicable to anyone from any other state?
Absolutely, yeah. So, it's all going to depend on what's happening in your state as far as appreciation right now. Most states, unless you're like maybe in California or Florida, one of those states, or New York, some of those may be dropping, not appreciating at as high rate as Texas or even Tennessee. But 5% is still a very conservative number to use for appreciation, annual appreciation. So, in fact, honestly, here in Texas, the last few years, we were appreciating at, 10 to 15%. So, 5% is a very conservative number. So I would say that would be about the same for most markets out there, unless you're just in one of those markets that, have a lot of distressed properties that aren't doing well.
Okay. Thank you.
Okay. The other thing for first-time home buyers I'd like to stress is, getting pre-approved versus pre-qualified. Okay, so when you speak with Timmy or whoever your realtor is, the first thing they're going to ask you is, hey, are you pre-qualified? Or have you spoke with a mortgage professional? It's a really important step in the home buying process because it, one, lets you know what's attainable as far as financing, but also two, helps you set those budgets for you to make sure you're looking at the right priced properties based on your expectations and ability as far as down payments and closing costs and things like that. Okay. But there are different levels of a pre-qualification or pre-approval that you should know about. Number one is the basic thing that you do is pre-qualified. So when you push button and get mortgage on Rocket Mortgage online, okay, they're only doing a pre-qualification because the information you plug in, they're not verifying anything. They're just going off of what you plug in. And that's basically what a pre-qualification is, we're not verifying anything, just based off of your word, what you say you have and make and everything else is what that is all based off of. And not that anybody ever like purposely gives inaccurate information. It's just that sometimes, when you're underwriting a mortgage, your real income isn't the income that you qualify with. And so that's why it's important to speak with a mortgage, individual to make sure that, we're looking at the right income numbers. We're looking at the right asset numbers. We're looking at credit correctly. We're looking at all of those things accurately. So when you do a pre-approval, you actually have to provide tax returns or W-2s or pay stubs, bank statements. All of those items are verified by your mortgage lender at that time, and then you're considered pre-approved. Now, If you want to elevate that to a whole nother level, you can do what we offer is a conditional approval. So you don't even have to have a property, but we can still go ahead and underwrite your loan. So that means we now have an underwriter. So I looked at it. Now I'm going to have an underwriter actually review those income and asset documents just to verify that everything does check out, meets the guidelines of your loan that you're applying for, and that at that point you are good to go. And all you need to do is find a property. And so that's where you really want to be, because it'll help things go a lot quicker, smoother, and possibly help you in a multiple offer situation that you've taken those extra steps. So, that's just a little bit about what a pre-approval versus pre-qualified is.
Guys, do you have questions on that? Please let us know, or just reach out to Chris later.
Yeah. Yeah, absolutely. And just to kind of quickly cover some of the criteria that, mortgage companies are going to assess for you on getting qualified for a mortgage. It's kind of like buying a diamond. You hear the 4 C's of buying a diamond. Well, there's 4 C's of getting a home loan. And those 4 C's are your cash, which is not just necessarily how much money you're putting down, but how much money you have, how much money you have left over, and then we're also looking at the collateral, which is the property. We're also looking at your capacity. Capacity is all about your ability to repay that loan. So we're going to verify the income and, how likely that is to continue, how steady that income is. And then we're also going to look at your credit. And that's not just a magical credit score that we're looking at, but we're looking at overall credit history, maybe any credit prior events like bankruptcies or foreclosures. We're looking at the kind of the full credit picture, not just a magic credit score. Okay. So that's a little bit, very brief description of what we are actually assessing for a loan. But, just want you guys to understand there are, aspects of that we look into, and some require more scrutiny than others. Okay.
Gotcha.
As far as mortgage products out there, there's a lot of products that you can offer. Your traditional products are going to be your conventional loans, but there are also some great government, loans available that have lesser restrictions, like FHA, VA, USDA. Jumbo mortgages also is another product that you can run into. And then you can even get renovation loans if you want to buy a house that needs to be fixed up. That's something that is attainable. Or if you're looking to buy an investment property, you can get financing on that as well. All the different options allow down payments anywhere from 3 to, whatever percent you can put down. And then you can always couple one of these loan programs with down payment assistance if you really need that help also.
Good.
So just a very brief overview of these loan products. I'm not going to go into great detail because of our limited time here, but there are advantages and disadvantages of all the loan products available out there. And this is just kind of a little shot at, what that looks like as far as the differences of those basic loans that are available. So to touch on down payment assistance briefly for you, and I'm glad to jump into further detail with these. But as far as down payment assistance goes, in Texas, there are several Texas-specific products available. You're looking at the Texas TSHAC loan, which is the Texas State Affordable Housing Commission. They offer some really great products to help you with down payment assistance, where you can get anywhere from 0% down payment assistance all the way up to 5% down payment assistance, and that can go towards closing cost or down payment. Now, the thing I like to stress on down payment assistance is there are not really very many products out there that I would say are free down payment assistance. So with these down payment assistance programs, the state has fixed rates. So if you kind of look over here at this little chart, you can see, hey, if you want 5% down payment assistance, you're going to pay a rate of 7.625. But if you could get by with a little bit less, 2% less down payment assistance, that rate could be 7%. So the more assistance you need, the higher the rate's going to be. Okay, so it's not technically free. And then each one of these programs have different ways that they structure the down payment assistance. You can have options of where you are getting like a silent second lien that is 0% with no payments that stays on there forever until you sell the house. Or there's options where it's 3-year forgiveness forgivable assistance. So there's different ways that it is structured, and that way you can kind of see here. And there's even like a grant, but like if you need a lot of money, there's only 2% available on the grant. But if you needed 5%, you would have to do one of the 3-year forgivable second liens. There are also typically income limits for the down payment assistance programs and minimum credit standards for the down payment assistance programs. I see one of your questions on the board. Do you have to be a
Yeah,
resident?
so we have two questions actually. One came earlier. I didn't want to cut you short. And the
No,
first
go ahead.
question was, should I be pushing for the upper limit of what I'm qualified for? Or will I be pre-approved for the most I can afford from my income?
So number one, that's a great question. And one of the questions I get most commonly whenever I am doing a loan application or a loan consult is, how much can I buy? How high can I go? And the conversation I like to have at that point is, well, what are you budgeting? Like, what is that max monthly payment that you feel comfortable that you can make? And, when you answer that question, then I'm able to kind of reverse engineer based on the amount of money you have available to put down and what that monthly budget is, how much you maybe should buy, not necessarily how much you can buy, but how much you should buy. Now, when you're going through that pre-approval process, I would recommend you kind of qualify or attempt to qualify for maybe a little bit more than that max payment, just in case you decide to push the limit on what you can qualify for, or what you do buy. So I wouldn't, do a pre-approval process at that bare minimum amount. I would push it up a little bit and make sure that you have room to wiggle. But, it may not be necessary for you to max it out at the absolute highest you can go, because you probably won't want to go that high or need to go that high. So, that would be my recommendation as far as that goes.
All right. So the other one says, do you have to be a resident of Texas to qualify for the down payment assistance?
So for these Texas programs specifically, yes. Now, each state typically has their own, products that they offer with down payment assistance, and there's a few of those products that are also nationwide. The better products tend to be your state-specific products because they offer more than those national programs do. So I would encourage you to look into those local programs you have if you are out of the state of Texas, and see what is available. And you'll likely will find it's better than one of those national programs. Okay. But every state has products, and even some cities have their own products too.
Okay. I agree with
Um,
that. I agree with that.
Now, Texas also offers the TDHCA program, which is the Texas Department of Housing. And they have their own program too. It's very similar to TSHAC, but there's a couple of different caveats that, may be a benefit for, a potential home buyer versus the TSHAC program. So that's why I would encourage you to look into all of the programs available and see which one fits best for you. For instance, on this product, the rates are, a little bit higher, and, and the assistance is a little bit different. But there are definitely options here that you should assess and look into.
All right, we have another question.
Yeah.
And it says, do you advise to go for the down payment assistance versus putting down a down payment?
So that's a great question. One is, if your barrier to home buying right now is your down payment and that's it, then I would strongly encourage down payment assistance if you qualify for it, because of what we went over earlier, which is you don't wait to buy real estate, you buy real estate and you wait. Okay. So if that is your one barrier, is the down payment, and you do qualify for one of these programs, I encourage you to go after that. Now, if you have your own down payment money, okay, then you would likely want to assess your situation and see, is it necessary to do the down payment assistance, because you will pay higher interest rates, maybe a few more closing costs and things like that, and find out, hey, is it better for me to use my own money because you have it, or, can I put that money somewhere else, make some more money on it, or invest it somewhere else and use the down payment assistance to buy the house? Typically, if you have your own down payment money, it's going to be better for you in the long run. Okay. Than it would be to utilize down payment assistance.
All right, there's another question. If you if you get down payment assistance, can you still lease your own property? Okay.
So great question. So a lot of these down payment assistance programs, especially the ones specific to Texas, do require it to be your primary residence for 3 years, or you have the potential of having to repay those funds. So if you buy a property, let's just say in year two, you rent it out and go buy another property, that would typically re-trigger the repayment of those down payment assistance funds. So you would then be responsible to repay those funds at that time. So if you're not planning to be in the home for like a minimum of 3 years as your primary residence, you may not want to use the down payment assistance unless you're going to be prepared to pay that back at some point in the future.
So does that include living in the house and renting a room out, or it means like
As
just
long
only
as it's still your primary residence and you rent a
Mhm.
room, that
Mhm.
that should not be an issue as long as it is still your primary residence. But if you move out or you sell that home, then that would typically re-trigger the repayment of that.
Got you. Can we look at
Mhm.
this question that we had earlier? And one of them, well, we have two of them, but one says, I'd like to be paying low mortgage. And I think you addressed that, but I just wanted to be clear that we did. I'd like to be paying a low mortgage. So I want to put a lot down. About how much do I have to put down to get my mortgage around 1,500?
Mhm. So great question. So number one, as far as the payment piece goes, obviously it would all, to get a payment at 1,500, it would depend a lot about like, what price of home you're buying, how much the taxes and insurance or HOA is, and those factors. Now, when I'm speaking with clients and we're going over all of these options during our consultation, of payments and down payments and things like that, I'm going to, help assess for that client is, are there other avenues to, instead of putting a large chunk of money down and tying up the liquidity of those funds into the home, are there possibly better ways to invest that money to get a better return, or maybe eliminate other debts that maybe have higher interest rates that are not tax deductible? And look at the overall holistic strategy to build wealth for that client is what I would do. So it's not always the best answer is not always put down all your money and get the lowest payment possible, because that may not be the best route to go. So it would really depend on the individual specific situation, to get to that. Now, one thing I'll tell you is like, generalizing, down payments and cost of buying a house, about every $1,000 more that you finance may cost you about an extra $8 to $9 a month based on rates and everything right now. Okay. So a lot of the times you may look at that and say, okay, well, I got $10,000 more to put down. Well, is that $10,000 worth saving $90 a month on the payment? Or is that $10,000 worth paying down a credit card that's, 20% interest? So that's the way you have to look at it.
Gotcha. Thank you for that, Chris. Another question says, how long do you have to be a resident in Texas to qualify for any of this program?
There's no requirement at all. In fact, you could be moving from another state to Texas and still qualify for one of these Texas down payment assistance programs. The criteria is that you have to be buying in Texas. So there is no residence limit or requirement for that.
Gotcha.
Now, this
Other
other
question.
screen that I have pulled up here too is a national program. Now, I only have highlighted for our Texas area, and this is a really unique program that Fannie Mae just came out a few months ago.
Okay.
And what's unique about this program is that it does not have income limits on it, and it's not based on where you're buying. It's based off of where you currently live. And, so if you look at this map, all the shaded areas on this map, which is DFW area, if you currently live in a shaded area, then you qualify for a $6,500 grant. Now, I told you there's not a lot of options out there that include free down payment assistance, but this is one of those programs that do. I mean, $6,500 grant means it's a grant. You don't pay anything for it. The interest rates are the same as they would be if you were putting your own money down. So this is a really, really great program if you happen to live in one of these current shaded areas. And it's basically Fannie Mae, is trying to serve those areas that may be considered underserved, that are, or a high concentration of renters. And so, if you live in a shaded area, you qualify for this program if you could qualify for a conventional loan. Okay. And so this is only on conventional, not FHA, but it is a really, really great program should you live in one of these current shaded areas.
Awesome. And we don't know if this is applicable to other states, or we just know about Texas.
There are other underserved areas in the nation that would qualify. I only have the DFW map up here, but there are other areas, MSAs, that do qualify. I see a question about disadvantage. Disadvantage of this
Mhm, this
program would
program.
be you cannot go FHA. That's really the only disadvantage.
So you can
Um,
go, you can go FHA.
you cannot do FHA with this program. This is only eligible on a Fannie Mae conventional loan.
Gotcha.
And so
All
that would
right,
be
it's
the only,
1:30, Chris.
yeah,
And oh my goodness, we have to stop here. We've
no
answered some
worries.
of these questions. Yes, and guys, please, you have Chris's info on the screen. Please reach out to Chris. Text me if you have more questions. Until next time, we really, really have to go. Thank you
Well,
for
great.
being
Well,
a
Timmy,
part
sorry
of
to cut it short, but if there are any other questions, yes, I'm glad to, individually, one-on-one, answer questions and go from there. So
it.
I appreciate your time and thanks for having me on.
Thank you.